Stock futures falling this morning as investors await President Trump's April 2nd tariff announcement, which continues to weigh on markets as investors kick off second quarter trading with headwinds looming. Joining us now for more, Michael O'Rourke, JonesTrading Chief Market Strategist. Michael, great to have you here. Stocks had a tiny bit of a rebound. Obviously, we're seeing some more selling this morning. Where do we go from here? Have we hit any semblance of a bottom, or is this just the beginning of potentially more pain?
I think it's probably the beginning of some more pain here. We've had a nice correction in the market, but as you know, there's a couple of negative catalysts out there that when you combine them, the market probably should wind up moving lower over the intermediate term. Obviously, we have the tariff uncertainty, and we'll get a little more clarity tomorrow, but we're not sure it's the type of clarity we want to receive. And then, as you mentioned earlier, AI stocks are coming under pressure, and they've been a big upside catalyst for the market for the past 2 years. And we have to see how that, that group how their business plays out, during earnings season and in the next few months.
Michael, one of the big questions we've been trying to figure out is what is priced into this market. So some of the reports today are saying we could end up getting a 20% universal tariff announced tomorrow, although we don't yet know exactly what's going to be announced. But has the market priced in a scenario like a 20% universal tariff?
I don't think it has. As you can see, the market reaction after the auto tariffs were announced. While we knew auto tariffs are coming, the market was still somewhat surprised. I think a 20% number on everything that's imported into this country is a massive number. And it's part of the president's larger plan. And we also don't know what the retaliations are going to be. So it's really hard to game plan how this is going to play out for earnings, how it's going to play out for the economy, how it's going to play out for companies. So that in combination with the weakness we've seen in the AI sector, which has been the catalyst for the market on the upside the past couple of years, it means there's still a lot of risk out there that's yet to be, priced into share prices.
And Treasury Secretary Scott Bessent was talking about some sweeteners to come following tariffs. In an interview on Fox News, he talked about tax refund for automobile purchases, for example, and also no tax on tips and some of those sweeteners. Are those sweeteners enough to be bullish for the market after some of the pain driven by tariff policy?
I don't think they are, just in the sense of you have to actually get those funds. The government or customs has to collect those funds, and they have to go to Treasury before you can start handing money out. And ideally, you want to be in a situation where you're not, taking from one, collecting money one way and giving it out another way. The whole idea is to get the deficit in order. The whole idea is to open trade up. I mean, the best case scenario in my opinion, for the administration is that when one or two countries come out and say they're going to drop their tariffs, which is what the president has talked about, like what he'd like to see, all of a sudden, if that starts a trend, then you're opening up trade, and then you're opening up, economic growth opens up, and you're moving in a positive direction. So right now, as the two sides go back and forth and are going to spar over, what tariffs going to be and who's going to retaliate and how, it just creates a lot of friction in the near term that, we can get those sweeteners later, but until you collect that money, we really don't know what they're going to be.
And to your point earlier as well, market recovery is going to be difficult to achieve without a recovery in the mega cap tech names. A lot of people really relying on those for their portfolios, given the weighting on the indexes here. Do you envision us ever getting back to a 30x multiple on the Magnificent Seven, given the year-to-date performance we've seen in some of these names?
I think you're going to see more multiple compression in that group. Obviously, the excitement around that group has been that they're going to be leaders in the AI space, the massive investment they've made in the space. But there is the risk that, you start to see disruption. There's concern for Google shareholders that ChatGPT's, garnering search business and things like that. So you're seeing more competition, pick up. You're seeing the likes of Broadcom, Marvell, and Amazon starting to compete with NVIDIA. So I think, again, there's more, there's no clue, it was pretty clear who the winners were the past 2 years. It looks like there's going to be more competition going forward. So I think it's another situation where investors need to wait to see how the environment evolves for AI.
Mike, I want to ask you about trading vibes through a particular lens. Even as we see all of this choppiness from the macro, we see individual examples of things like Newsmax, which came public yesterday and surged by 735%. It's up another 44% this morning. Does it show that sort of the meme stock appetite is alive and well? And if it is, what does that tell us about sort of the bigger markets right now?
I think it does say that meme appetite is alive and well. I mean, it is interesting. Of course, CoreWeave was supposed to be the big IPO of the year, and that disappointed on Friday. And then Newsmax was more of a sleeper, a small deal, and of course it has a small float. So it's been, it's gone straight up since it opened trading yesterday. But things like, these companies selling shares to buy Bitcoin. There's still a lot of excess liquidity in the tape. So again, it just shows we probably have not priced in the risks associated with, the economy and tariffs, and if we do see a larger AI unwind. So there's still, I would say there's still a fair bit of risk out there.
Mike, thank you so much. Good to see you.
Thank you.